Welcome to the final stop on our interstellar investment journey. After exploring emerging players brimming with dreams and risks, it's time to visit the old guard of the galaxy. These companies have been in the field for years with established networks, stable customer base, and consistent cash flow. They may not have the sexiest stories, but they may offer a more solid safety net. Let's first consider Iridium, ticker symbol IRDM, the phoenix of the communications world. Iridium's story is a saga in itself. Its business model failed in the late 1990s, but its satellite network survived and ultimately rebounded thanks to its unique global coverage. Iridium operates a network of 66 low-orbit satellites, providing true global voice and data coverage, including to the North and South Poles. Its customers span maritime, aviation, government, mining, and other industries that rely on connectivity in remote locations. The company's core competitiveness lies in its global coverage, its deepest moat. No matter where you are in the world, Iridium can provide services. This makes it an indispensable choice for many mission-critical communications applications, such as search and rescue and defense. It boasts a large and highly engaged user base and long-term, stable contracts with the U.S. government. Iridium is a mature, profitable company. However, in its second quarter 2025 earnings report, while revenue exceeded expectations, reaching $217 million, earnings per share fell short of expectations, and the company lowered its full-year service revenue growth guidance. This news caused its stock price to plummet. But for value investors, this could be an opportunity. After the decline, Iridium's price-to-earnings ratio has fallen to around 25 times, a relatively reasonable valuation for a technology company with stable cash flow and high profit margins. Furthermore, Iridium has the lowest risk profile of all the companies. Its business is highly mature, with risks primarily arising from slowing growth and pressure from new competitors like Starlink. However, it also has the highest margin of safety. Stable service revenue, sustained profitability, and active share repurchases and dividends together provide a solid value foundation. Let's take a look at another interstellar wildcard, Globalstar, stock symbol GSAT, Apple's satellite partner. This veteran company is a unique entity. Its fate is almost entirely tied to Apple. Globalstar provides the core network support for the iPhone's satellite emergency SOS and text messaging features. Under the agreement, Globalstar allocates 85% of its network capacity to Apple. While it's easy to lean under a big tree for shade, this also presents its greatest risk. Recent reports indicate that Apple is working with SpaceX's Starlink network to integrate it into the latest iPhone software. Upon the news, Globalstar's stock price plummeted. This highlights the extreme fragility of its business model. It is essentially a single-client company. If Apple decides to switch suppliers or bring in a second one, the blow to Globalstar would be devastating. Therefore, the risk is high, and investing in it is like betting on Apple's eternal love for it. Well, friends, our interstellar journey is almost over. Now, let's summarize all this information and map out several viable investment paths. If you're a risk-averse investor, the Interstellar Gambler path is more suitable for you. Core target: AST SpaceMobile, ticker ASTS, where you can gamble on the potential to change the world with a small amount of capital. This is a high-odds lottery ticket, with either a zero return or a return of dozens of times. This type of investment is very selective and is only suitable for speculators with a high risk tolerance and ample funds. There's also a high-risk Moonland Pioneer path. Investment target: Intuitive Machines, ticker LUNR, combined with some Rocket Lab, RKLB. The core logic is to bet on the acceleration of a new round of space race, particularly the rise of the lunar economy. LUNR is the direct beneficiary, while RKLB provides critical transportation. This investment path also carries significant risk and is suitable for growth-oriented investors who are optimistic about the long-term space exploration theme and can withstand significant volatility. If you're less aggressive but can tolerate some risk, you can choose this moderate-risk data is king strategy. Investment targets: Planet Labs, PL, and Spire Global, SPIR. The core strategy is to invest in the most certain trend in the space economy, the value of data. Both companies possess unique, hard-to-replicate data assets and are on the path to profitability. This strategy is suitable for investors seeking thematic growth but preferring relatively manageable risk. For example, Planet Labs offers a higher margin of safety due to its clearer path to profitability and stronger moat. If you're a conservative investor, the lowest risk space rental strategy is for you. Investment target: Iridium Communications, IRDM. Think of it as a utility stock in the space sector. It has stable cash flows, a mature business, and a global network. The recent stock price correction provides a rare entry point for investors seeking stability and value. This also makes it a popular investment for risk-averse investors, value seekers, or those seeking portfolio diversification. The space economy is booming, and it's undoubtedly one of the most exciting investment themes of the next decade. But remember, the brighter the stars, the darker and colder they are. Before you decide to board any interstellar spacecraft, please do your research, assess the risks, and ensure it aligns with your investment objectives. Wishing you safe sailing. The above is just some information and personal insights I've shared with you today. It's not investment advice, so please don't blindly follow it. Thank you for your company.